Hey, good morning. This is Mayor Valensky with Driving Markets. Hope you're all well. Driving while talking about markets. Anything said in this piece is for media publication only. It's not investment advice, not financial advice. That's it. So just to give you a little bit of background, I'm trying to build up the audience on driving markets. So I will be doing some studio sittings and some background productions in order to try and develop the channel, because the channel is just simply not growing fast enough. I know it's very popular, and I know the feedback I get is really positive, it's really good, but I want to build it up. At the moment I don't have enough subscribers. Really I want to get to the stage where there's multiple subscribers and it becomes really popular, and it can go out again against all the banks, the investment companies, the traders, and give you an overall market wrap, something that's a bit different, a bit quirky, but unusual, rather than the same boring, videos that you see on YouTube. So I'm trying to make it a little bit dynamic and a little bit interesting. Okay, so let's kick off and let's see what has been driving markets lately. So yesterday the Dow jumped up, which I talk about the US markets because they are the world leader. That is the central engine of financial markets, what's going on in the States. So the Dow, for example, the Nasdaq, S&P were all up yesterday. The VIX was up, the US Treasuries were up, everything was up, Bitcoin was up, was all up yesterday. Why was it up? Does anyone know? Because Janet Yellen came out and said that she expects inflation to be far lower in 2023. This is the same person that in 2022 said inflation is just a passing issue, it's under control, we'll have it under control by April and May, don't panic, and she got it completely wrong. Now we've got to trust her that she's got it completely right in 2023 after inflation has shot up, and she's not even being cautious with her words. Now we could get her onto driving markets for an interview, and I could like to interview Janet Yellen to drill down as to what makes her, what made her say in 2022 that everything was wrong, and in 2023 everything's going to be right. I'd love to have an interview with Janet Yellen, because what I've seen of the presenters on CNBC and all of the financial news outlets, when they interview these professionals, they don't really give them a hard time, considering these so-called professionals, these leaders in financial markets, are there to guide us, and they have huge experience, receiving huge salaries and costs and travel and expenses, where all their salary is basically pocket money, and yet they come out with the biggest load of trash they come across. So no, inflation's not going to be rock bottom to the next year or drop. It's going to be actually be higher. Yes, Mayor Valensky is challenging Janet Yellen and all of the Fed and the central bankers that inflation is not going to be down. It's not going to go down. It's actually going to go up. If it was going to go down, why have we seen last Friday the PPI, the Producer Price Index, go up? And why have we seen the ISM survey, which was last Monday, go up? Why are there indicators there that there's a furnace, a real fiery furnace of inflation, undercurrent of inflation, building up and growing within developed countries? Enough's enough. So we have to really grab this by the horn. However, as far as the financial markets are concerned, they believe someone like Janet Yellen. They don't believe someone like Mayor Valensky. Why would they? Who the heck is Mayor Valensky? And therefore, all the markets shot up on the back of that. If you remember, also recently, I've been calling for a year-end rally, or likely year-end rally in financial markets towards December end 2022, and that's for several reasons. The markets are looking to go higher because they don't want this year to be registered as a significant loss. It doesn't look good on the hedge funds, the investment funds, insurance funds, your pension funds. It doesn't look good, so therefore they're trying to quickly grab as much growth as possible in the last couple of weeks of the year, and that's what's likely to happen. You're likely to have a more aggressive rally into the end of the year, in order that the markets or the companies, the investment houses, will have a better number on their books to show what their production was for 2022. Because at the moment it doesn't look particularly good. Better than it was, by the way, doesn't look particularly good. Going forward in 2023, I can see markets dropping 25-30%. When I say markets, I'm talking about the Dow, the Nasdaq, the S&P, the UK FTSE, the CAC. The DAX falling 25-30%. We're going to have rising energy costs, not necessarily gasoline costs, rising energy costs as the demand for energy increases, and also the cost of food and production and growth is going to go up with all the raw materials rising. So that's going to give some substance to inflation as we go along. There's also going to have an impact on the property market in 2023. We've begun to see the impact in terms of lower level of sales amongst properties, and that's likely to continue in 2023 with prices coming down. There's not a great supply out there, so that's holding prices up. But as interest rates rise, it's going to put more pressure on the actual consumer and on the mortgage holder for him to support and maintain his household and the costs. That's going to take more money out of the economy. Interestingly enough, some of the shares I expect to do very well. For example, Tesla next year, I expect to do really, really well. I haven't really called it down. I've only called it down temporarily. I got a lot of feedback from Tesla holders and Tesla followers that why am I calling Tesla down to $150? I'm calling it down short term because of the Twitter issue. He's got to raise money on Twitter. He's going to have to leverage his stock. Elon Musk is going to have to leverage his stock in order to complete and finance and push Twitter forward. Twitter was a mess, and Elon Musk is the best person to take Twitter and make it into the #1 social media platform. But he's going to need money to do that, and he's going to have to leverage his Tesla stock holdings in order to finance Twitter. I hope it comes off, because I don't want to see Tesla and I don't want to see Elon Musk suffering as a result. What I'd like to see, actually, I can't even get around here, so I made a mistake. What I'd like to see is Tesla do really well, change Twitter, make it into a free speech platform, obviously without racism and without negative, with hate speeches, but a normal free speech platform. Someone like Donald Trump can speak openly on it and get Twitter back up there ahead of Meta, Facebook, Instagram, and all the other media social platforms, because I do love Elon Musk and I want him to be successful. If he's successful, then I'm sure we'll all be successful. Maybe. Anyhow, going on to another share that I'm really anti. So I've gone on to the favourite one, which is Elon Musk. Now I'm going to the anti one, Mark Zuckerberg and Meta. Meta is going to go down to $70 a share or less. Remember, all of their revenue is based on marketing advertising revenue, and that advertising revenue is going to get even tighter in 2023, and it's going to make it a lot more competitive for all of those media companies that are fighting for the same customer and the same advertising space. They're going to have to lower the prices, and Meta is just not going to be there. They're pouring all their money into metaverse, which is a complete, as I said many times, complete and utter waste of time. Complete waste of time. Don't even bother going there. And that's going to push Meta shares all the way down to $70. Amazon also is going to be falling, and Apple's going to be under pressure, because you can bet your bottom dollar that Elon Musk is going to come out with a competitor to the Apple iPhone and to Android. And if he does come out, I think his popularity will just drive people to go and take out that particular bit of software and that particular bit of hardware in order to move away from Apple, and therefore Apple shares will go down. Now, there's a lot of hardened Apple lovers out there, and they say Apple will never go down. Well, I believe it will go down. I think it's going down to $100 a share. I'm not saying necessarily it's going to go bust, but if it doesn't get innovative, then it probably could end up, not next year, but it could end up going all the way down to below $100 a share. So my call on Apple is below $100 a share. Regarding US Treasuries, they've creeped up a little bit to 3.61, indicating that they're not going to there's not going to be significant interest rate rises in the US. There is a CPI number out today, Consumer Price Index, which is an inflation report in the States. That would be a very good indicator as to where inflation is going. Expected to be lower than the previous month. Remember, the price of housing, the price of oil, major components of that inflation report, and that's going to have a big impact. Also in this week, you've got the Bank of England interest rate decision, and you've got the ECB interest rate decision, and you've got obviously the Fed on Wednesday increasing interest rates by 50 basis points already built into the price. As far as foreign exchange concerned, those FX traders, then you're going to have a weaker dollar going forward, unless there's some aberration or something unusual happens in financial markets. Probably weaker dollar. Interestingly enough, stronger pound. I do believe that the pound is on the cycle upwards, and we are looking at 125, 127 to the dollar as stated overall. And next year, ECB, as far as the euro is concerned, we're looking at 90 to 95 against the dollar on foreign exchange. Oil is bounced up a little bit. Major support level at 70, 72. If it breaks below that, then it's going all the way down to $55 a barrel, which would be really unusual considering I've been calling it at $120 a barrel since already May. So I got that one completely wrong. Please make a note. Got it wrong. Okay. That's more or less it as far as Bitcoin. I'm not going to go on about Bitcoin because I've already gone on about it 20,000 times. You know, my views on Bitcoin, it's going south. That's more or less it. So I wanted to subscribe, I wanted to comment, I wanted to spread, I wanted to get people to enjoy it. That's more or less it. Mayor Walensky with Driving Markets. Have a good day.